Do you want to start investing in stocks but don't know how to go about it? So today's video, I will be breaking that down. Why you should be investing, what is an investment, how to start investing. So even if you have as low as $100, how to go about investing. So stick around. At the end of this video, you should have learned how to start investing and how to start making your money work for you. Welcome back to the channel. My name is Tega. On this channel, we'll talk about how to grow your finances and also how to be productive. So if you want to grow your finances or you want to be more financially smart, why not hit the subscribe button and you'd see when I post new videos. So let's get this clear. Investing is very different from gambling. Now, investing is basically buying a small piece of a company. As the company grows, your small piece grows with the rate of growth of the company. Investment is different from gambling because investment, you are investing in real assets or real businesses that exist, that have like bottom line, staff, profits, have revenue, are involved in day-to-day activities. Now, gambling is just like guesswork, hoping that you would get some particular maybe numbers or a game or something. But investment is investing in a real business, putting in whatever amount of money you have into that business because you believe in that business. And then when it grows, you also grow in the share you have in that business. Why you should start investing early. The earlier you start investing, the more time you have for your money to grow. Let's just give a plain example. If you start investing in a business when it just started, like a startup, of course, when it grows and increases in revenue and profits throughout the years, what you would have invested would have grown because you had come in when it was almost nothing. There was no revenue, there was no profit or anything. But this business has now scaled up to a much larger business and your money has grown with that. A lot of people who have invested in companies that started up like Google, Apple, Amazon, all of those companies, if they invested in it when it was much of a startup, they would really have so much more money now than when it started, or than us who are just joining into the market. Going by that analogy, if you start investing $200 a month when you're 22, by the time you go to retirement age, which is like 65, you would have had over $1 million in your account. If you have an average yearly returns of about 6 to 8%, you would have had that much because you have enjoyed the gift of compounding interest. You had enough time for that money to be in businesses that are growing, and so they have grown and earned you more money, and you wouldn't even have had to buy a lottery ticket or gamble anything. Next thing will be choosing where to invest. Usually for the stock market, you have like majorly two options. You can either invest in an individual stock or invest in an ETF or an index. Let me break that down. An individual stock is buying into a particular business. This could be like an Apple, a Tesla, Walmart, or any of the businesses you know that you believe in that would grow. Now, these have potential of higher risk because that's like one business. If anything happens to that business, then your money could go for it. So, and there's also higher returns if your business does well. You could obviously get like a real boom. You could get really good returns up to 100% gain or even more than that, depending on how the business performs. The second option is to buy an index fund or an ETF. An index fund or an ETF is basically buying a bundle of stocks together at one click. So this obviously is safer because you would probably be buying like a whole lot of companies in one. So if one is not doing so well, the other ones may cover up for that issue that the one may be having. So this is safer, but this has like lower terms of growth. So if you want stability, you go for an ETF. If you want maybe faster growth and you have studied the companies and seen that they have like real potentials, then you go for an individual stock. For most beginners, it is safer and easier to just pick an index fund or an ETF that you believe in and just keep investing in that. But I would advise you to study and become more vast in investment. I think having so much knowledge in investment would help you pick things that would help you grow. Also, understanding when you're entering the market, what age you're entering the market at, and what you're trying to achieve. If you're trying to just achieve stability and maybe not fast term growth, then you can invest in an index fund or an ETF. If you want to achieve fast term growth and you would be monitoring your investments, then you can invest in stocks, see how they grow, and maybe, sell, buy, depending on how the market is performing. So the next thing is to open an account and start investing.